right, we are live. Sean, how are you doing this morning?
Doing very well. Very well. Yourself?
I'm doing fantastic. Thank you for joining us today.
Yep.
To get us started, why don't you tell everybody who you are, where you're from, and how you got into real estate in the first place?
So, Sean McLean, I'm the managing partner at MPact Collective. We're based in New York, on Long Island, and we are an impact-based real estate development firm. We do old school community organizing based land development. So that means we partner up with municipalities, or we go into local communities and control large areas of land and work with the community, the institutions, the equity holders within that community, the businesses, the landowners, the municipality, to co-develop a project that makes sense in character of the community, produces the greatest amount of social and environmental impact for the area, and produces market or above market returns for our investors. So it's a complex spider web of endeavors. It takes a lot of trust building and time and effort, but there aren't that many firms out there that still really know land development from the ground up and deal with the infrastructure, the schools, the traffic, the sewer treatment plants and potable water plant, and moving regenerative economies and ecologies forward and that type of thing. So it's an exciting place to be at the moment.
I love it. Yeah, no, I there's a huge development. It has to be, I don't know, a couple thousand homes going up near where I live, and just seeing the infrastructure they're putting in there, it boggles my mind, the planning and the attention to detail that has to go into that size of a project. So I definitely want to get more into that as we go further. Kind of tell us, what got you into real estate in the first place, though. How did your story start?
So my father is a general contractor, and at 12 years old, I was given a shovel. Every summer I was put on sewer duty on every job site to keep me out of construction and development because of the risk and the cyclical nature of it, and fell in love with it. So what was supposed to turn me into a doctor or an attorney put the love of construction and development from the ground up in the blood. So went on to Princeton University to study cognitive psychology. And then from there, a master's in international real estate development from NYU, trying to really understand how people think. I grew up in Nassau County, New York, which was the birthplace of the suburban sprawl movement, the Levitt towns of the world. And I remember early on in junior high school that the downtown that we had next to the train station was dying. The stores were struggling to stay in place. The owners of the hardware store, which were third generation, were doing all they can through the Chamber of Commerce. I remember the conversations with my father every time we'd go in there, and it was something that we recognized early on. There's a better way to do development that's more inclusive, that was not cul-de-sac isolationist based development. It didn't isolate ages and incomes and street sections and gates. And so I think growing up in the middle of where that was most, where it was birthed in the US, I think that lent a lot towards trying to solve that problem later in life, my career.
I love it. And so I've never heard it talked about from that perspective. Like, original old school development kind of had segregation in mind, whereas both economic and socioeconomic, whatever it may be. And so your firm, what you guys are trying to do is bring everybody together, kind of make it more homogenous, I suppose is the word, if it's the wrong word, but more inclusive of everybody in the community.
Right. Inclusive is the term. We are trying to raise we are trying to increase the equity of all residents of an area, right? So they should have some sort of ownership, even if it's not stock ownership in the development. They have ownership in the outcomes of the development and what gets produced there, and the how we deal with social mitigation of an area that that has issues that are either purposeful disinvestment, which happens significantly throughout the country, or simply the eroding of the social structure through other economic or social pressures. Everybody needs to, if they're willing, is invited to participate in that. And so we go out to create something that the community really will endorse, and therefore the elected officials will endorse. And in that way, we can have open conversations about the economics of what's possible and what's not possible. But you can't, unless you have a trusting relationship with that community, there's not really a platform to have the commercial economic conversation, because it's met with distrust.
That makes 100%. It makes a lot of sense. So kind of taking it back, just to summarize, so you were really young. Your dad wanted you to become a lawyer, become a doctor. He said, "Here, take the shovel, go out into the project and start working. You're going to hate it." And then you went out, you did it, and turns out you loved it. So you grew up, you went to school, got a degree in psychology, cognitive psychology, and then on to a master's in international development. And since then, you've been working on land development, building inclusive communities in the New York, or is it national? Do you work across the U.S., or is it mostly the New York area?
Most of the work right now has been in the Northeast. So New York metropolitan area. Our largest project was the city of New Rochelle redevelopment, which was around 13 million square feet of entitlements. That was interesting. So we will go, we write our own zoning codes. We do all of our environmental work in-house, except for a few third-party consultants where we need them. And we create an as-of-right condition for people to invest and build. And not just us, but anyone who wants to come in and compete in the market has the right to go buy other people's property, the property we don't control. And we use it through these really flexible form-based zoning overlays. So anything within the context of uses of the code can be put anywhere at any time throughout the longevity of the city. All right, so the zoning, it's a zoning code. It's not just a site plan or a development. It's not just our capital. It's not all their eggs in one developer's basket. So we'll have, in New Rochelle, there are 23 different developments going on under the same entitlement package that we put in place. And we only controlled about 14 acres out of the 100 or so that really, where most of the development is taking place. And this way it mitigates the risk for the city and for everybody else. You're co-investing together, and when the market wants something, everybody is risk mitigated. Now we're always a market leader. We're a front runner in different products and different markets, and because we deal in place-based economics, we are finding highly economical investments, things that are returning well above market returns, because we're creating the value through the place-based economics rather than following macroeconomic trends, which is a lot of the fear you see in the investors' eyes right now. Oh, look at the macroeconomic trends, where the jobs growing, what is the CMBS risk to non-rent payments, who's going to default, whereas all of these macroeconomic questions are completely eliminating the ability to invest locally in a small town outside of Rochester, New York, in a purpose-built single-family home rental community that provides all of the traditional neighborhood design and mixed use and retail and the new social distancing norms, and the ability to have cohabitation, the ability to walk to work from home, and walk to the Erie Canal Trail, and 1,000 miles worth of jogging, bicycling trails, canoe trails, et cetera. So, it's putting all these different things together in a place that on a macro level, nobody could possibly identify.
Gotcha. That is super interesting. I want to go through kind of the process. But before I do that, I mean, you use the term place-based economics versus macroeconomics. And so I kind of want to, further define what you mean by that. So it sounds like you're talking about just a local, you're basically deciding on the place that you're doing the development based on local economy and not how it ties into the broader economy.
Right. So you have to look at it in the context of both. But when you're doing mixed use development that is rental apartment driven or single family home rental driven, or even single family home for sale driven, you have to understand the dynamics of that place. And so in 2018, my partners and I recognized the trend towards moving away from the urban centers to have densification within the rural communities that were commutable to major urban centers, right? So 12 to 15 units to the acre. We saw a push towards a single family home and townhome rental where you had your rental, you had your community, you were maintenance free, but you still had a backyard and a barbecue and common green areas and community gardens. And yet 20 minutes away is an international airport, or 100 miles away is Manhattan, right? So, those are things we started to look at. And then you look at what happens in that economy. And we like to call it, it's probably not a popular term, but we call it a cannibalism quotient. We look at the existing rental stock, the micro and macroeconomics of those tenants. And if you see a place that has 97% occupancy, all of the buildings are 55 years and older, and you have 550 households that rent that make north of $50,000 a year in those apartments, all within 5 miles of a site that connects to the Erie Canal, a town park, and a state university. Those are really good place-based economics, when it would be very, very difficult to discover that from a macroeconomic view. And what COVID has done is COVID has accelerated those trends 5 to 7 years in our eyes. So we had started to look at them going forward and start to address them. COVID really has accelerated that trend. And the move to those urban centers in rural areas where you have access to farm-to-table movements, you can participate in them, but you still have a walkable mixed-use neighborhood that you can really enjoy. We think that is really growing rapidly now. So you take that, and we crossed all of those. We went back and we looked at the numbers from 2009 and 2010, and how did these neighborhoods that fit these kind of ideals of ours fare in the housing downturn in the Great Recession. And so we compared the resiliency of those markets around the different macro markets that we had identified, and we started to zero in. And then from there, just recently, we compared all of the job numbers and the job categories to the macro job categories and job loss across the United States. And so the project up in Rochester that we're doing, we are 30% below the national average in employment in retail and service sectors, 30% above in government, healthcare, and manufacturing sectors. So the resiliency of the employment market, even with the shutdown, even with dealing with this horrific epidemic, this particular place-based economic model is faring well above and beyond any other municipality that we've run into. So it's those types of things you only get when you're on the ground looking at individual place-based parameters, if that makes sense. So I know that was a mouthful. I'm sorry.
No, it's really interesting. It kind of rings true to my own experience. I'm out here in Seattle, and there are specific communities. Seattle is there's not a lot of room to grow except for up. And so there's towns, you'd call them suburban, but towns called like North Bend, which is a town out here that's experienced a ton of development. And I didn't really make sense to me because it wasn't, it's within 30 minutes of Seattle down the highway, but it's not in Seattle. And so I figured I was wondering why developers are not focusing on going up in Seattle and instead are going, building out these mini towns out, far out there. And it makes sense. It's out there by all the outdoor activities. It's within commuting distance to Seattle. It's a beautiful area anyways, but yeah.
And now with the have laptop will travel, you don't have to be anywhere anymore. It's a great thing that's come out of this is the old-fashioned employers starting to really not only accept but enjoy the ability to stay away from the office.
Yep.
Um,
Yeah,
and
that's interesting. My girlfriend works at Amazon, and that company is pretty much, I mean, entirely work from home now, and it seems like it's a trend that's going to stick, not entirely, but it's going to, it's going to continue to go past COVID.
I will tell you that a lot of the managing director and above level partners at the major banks in New York are really enjoying the time at home. The ability to do an IPO without a 6-month road show all over the world, and raise the capital to have a successful public offering on a new company from your living room is it's an amazing, life-changing event for men and women in their 50s that are leading these banks that would like to have that higher quality time at home with their families. So we really like that, and from the suburban point of view, in economies that are less robust than Manhattan, we think there's an opportunity for suburban offices to shrink dramatically, to encourage work from home, lower the amount of the cost of commuting, lower the cost of childcare, share those responsibilities with a work from home environment, and we're setting out to provide those rental opportunities to do just that. It really can create wealth within a community, especially a rental community that hasn't had that much opportunity to create wealth in the past, and lower the overhead of the business, which makes the business more resilient, and therefore the opportunity to continue to work is risk mitigated for the employee. So it's all of those things that we are trying to get involved with our actual residents and have those conversations with them, understand who they work for, where that employment base is, what their commutes are, and how they will live in a place that we design.
That's interesting. So the thing that kind of jumped out to me in that last little bit that you said, you were saying that from my perspective, it sounded like you were designing these businesses to not be, or not these businesses. You're designing these areas, essentially these land developments, to not include businesses, to not include the essential office business or anything like that. So kind of take me through the process of how you guys work, nuts to bolts. What is it that you look for when you're looking for these tracts of land, and kind of what, how do you get everybody involved in the process? And
Sure.
then on the back end, do you sell it to other builders to build on top of it, or do you build it yourself?
So we'll start in reverse order. In the past, we've sold off a lot of the entitled properties based on the investor preferences in previous investments. Right now, we are out for construction to build our first project under this new flag. So we are intending to build these products now and have a very interested hand in activating the residents and working with them. We always do mixed use. Everything we do is mixed use. We believe firmly in mixed use. We don't, however, want to dictate the commercial use of the space. So we would allow light industrial. We allow maker space. We allow retail or restaurant. And one thing we're trying to pioneer in our single family home development is a flexible tenancy within the space. So we're building, our first phase will have just 5,000 square feet of retail and 177 single family homes. But the 5,000 square feet of retail will be set up so any vendor who wants to come in can be choreographed within the space, and they will only pay us as a percentage of the income they receive on premises.
Interesting.
So they don't have to worry about, oh my,
Right.
how do I make rent next month? Or nobody showed up to the farmer's market, or, these mushrooms sold and those didn't. I have to wait 2 weeks to grow those mushrooms and bring them back to the farmer's market. So
I like that model. It's great. I mean, enforcement would be difficult, but I really like that model.
well, we will require them on site to use our point of sale system that will automatically separate the payments. And this way, when somebody pays, we'll get our cut. Now, will there be some leakage? Fine. But the main idea is to activate the space for the residents of the place and invite the rest of the community in. We're not retiring off 5,000 square feet of maker space, and farmers markets. The idea is that it doesn't cost us money to do it, and that we can invite, the yoga teacher comes in on Wednesday evenings. There's wine tasting on Friday evenings. All day Sunday is the indoor-outdoor farmers market. On Thursdays in the winter, there's a knitting club. Whatever it is. We can have an Etsy. It won't matter, right? The idea is that the community and the entrepreneurs in that community will decide eventually what is successful in that space, and that, to me, is the most responsible way to do retail now, and the most responsible way to encourage entrepreneurship and creativity within a community. So there's the mixed use aspect of it. How we get there is a two-pronged process, but the community is the key, as I mentioned earlier. We open up a local office. We go door knocking. We hire community organizers. We have conversation after conversation in what we call process before plan. So rather than, as a developer, coming in and say, here's what we want to build, and beating them over the head with it till they submit or they sue, then we rather have the conversation. What is it you see for this place? What is the character of the place that makes it special? We always find things that we would have missed had we come in with preconceived notions. And that's what's amazing about working with that community. So once you work with the community to understand what it is they value, we can start to work around ideas of a maximum theoretical development within the area that they've defined as needing redevelopment themselves. From there, we study the sewers and the water, the sea level rise if we're near a place where there's danger of that, the potable water access. Can we build community solar that will power the full development? How can we deal with stormwater runoff? All of the different environmental issues. The schools, what is the impact of the schools? What are the projections for the next 10 years without development? What are the next projections for 10 years with development? And then we can pare down the level of development based on what the issues are that we can't mitigate, right? I mean, at some point, things become untenable environmentally or socially, whether it's traffic or it's water pollution. There's always a level of cost versus economics that becomes untenable. So when we match the market to the environment, then we come up with the optimal solution. And it's supported by the community because they're the ones that really suggested it in the first place.
I love it. That is I've never heard of that model before, but it makes all the sense in the world to me. So that's fantastic. I love it.
We call it crowdsourced placemaking.
Crowdsourced placemaking.
Right. So
heard it here first.
Right, we're placemaking by crowdsourcing the ideas, and it's an exciting process to go through. Especially with what's going on now. In a lot of the areas we're in are heavily disinvested. Some areas that have been, purposely put into boxes that they're very, very low median incomes, poor access to quality education, maybe no access to early childhood education. We're often dealing with heavy recidivism in some pockets, and the recidivism is different, right? One community, it's an institutional level, generational repetitive nature. In other areas, it's human trafficking that produces an opioid prostitution, human trafficking ring. So each community has to be dealt with as that place itself. And when you go into those communities, you have to be able to address the specific issues within that community without just cutting and pasting the solutions from other communities, if you will.
Yeah, you're getting the answer from the community, not from your own mind, essentially.
That's right. That's right.
I like it a lot. I love, everything that you said so far. I'd like to delve in more. We are at 30 minutes and we try to keep these between 30 and 35 or 30 and 45. So I'm going to move us on here a little bit. So we're going to move into kind of the experiences and stories part of the interview. And we all know, real estate is a roller coaster. Doesn't matter what part you're in. If you're in development, single family, rentals, whatever, you got your ups, you got your downs, both emotionally and financially. So I kind of want to hear your down, your trough at this point. I want to hear what was the hardest thing you've gone through in your real estate career so far, and what was the lesson that you pulled out of that?
Well, 2008, 2009 was by far the hardest thing that I had ever gone through. I mean, at the end of the day, we are all masochists that are in this business. But, we are also passionate about it that we try and find ways through it. And going into 2008, we were all doing things that were typical to the market. We were going very long in land, where we were making purchases with a lot of debt. We were getting approvals from municipalities that resulted in 5-year lawsuits and battles. And once you got your approval, you couldn't change it. You couldn't change the who could occupy it or the use of it, the tenancy, for sale, rental, senior, assisted living. It was stuck in time and place. And if you moved a T or redotted an I, you were open for another lawsuit because you've destroyed your community, your trust with the community. And so coming out of that, I set out to invent a new way to do real estate. And that's what I do now came out of that time that was so difficult. We invented a way to do a flexible as of right zoning, where if you do all of it once, it is as of right forever. And you only have the conversation, you only have the one public hearing, you only work with the community once until you've satisfied everybody in the fact that it can move forward without contest, with everybody kind of rejoicing in that process. And if the market winds change and an office is no longer something somebody wants to build, right? 3 months ago, everybody wanted to build limited service hotels. In all of my developments, anywhere we were planning on putting a limited service hotel, I could now put a hospital, or I could put an office building, or I could put a multifamily rental building. I could even put townhomes instead. So the flexibility of zoning and finding a way to highly regulate the environmental realm through that zoning, including social mitigation, environmental mitigation, non-displacement laws, all of these things that help the character of the community that's there now to not cause gentrification and major displacement, but to still realize that economic value. All of that came out of the deep, dark hole of 2008, 9, 10, where you just couldn't do anything with anything. And there was no, so that it was a really interesting thing to see. And I'm proving now to be correct in my assessment that the flexibility that we designed, my team and I, into what we do now has weathered the next big downfall and is doing very well even in these times. So major lesson learned, changed the way real estate has been developed in a very large way, because that flexibility really hasn't existed before.
I love it. You said it yourself. So 2008 hit. You were kind of stuck in whatever you were doing. You didn't have a lot of flexibility. I mean, you got hit financially just like everybody else. And after that, you decided to reinvent the wheel, the square wheel that was real estate, and figure out a way to make it more flexible, more responsive to the actual location, the community that's in there. So that's awesome. I love it. So now I want to hear, that's the down part. Let's go back to the top. We're all in real estate for whatever reason. Individually, we have those reasons. What is your reason? What's your why? What gets you out of bed? Why are you still in real estate today?
Because real estate's been put in a box. It's been labeled a commodity by the major financial institutions and financial markets. It is evaluated as a cash flowing commodity. It's not. There are a few of us that actually create places and can create value in land that the market didn't already create by default. And so there are very difficult things that need to be done in this country and around the world for that matter, but this country needs to change the way they treat land, the way they treat infrastructure, the way they treat each other. And real estate it is one of those things that can hold immense wealth that can be shared as equity within communities. And it also holds great social value to bring people together. There's really nothing else like it that has the effect on so many people for so many generations, and can isolate and can cause conflicts. It can segregate and it can cause biases. The way this country has developed in the suburban model has caused isolation of communities and irreconcilable economic differences, where there are places that need to urbanize, that people need to move to places where they're closer together to support each other economically. And once they're supporting each other economically, they will turn towards investing in each other socially and emotionally in a way that removes biases and removes economic disparities. And that is what we generally have set out to do. The harder the concept is to exercise, the more likely we are to be attracted to it.
I love it. You said it earlier. We're all masochists in this business, so we're trying to do the hard things, but that's what makes it good. That's what makes it worthwhile. So,
absolutely.
Okay, so now we're going to go into a little bit about you personally. So, there's always reasons why we find success in business. Looking at yourself, what is the one thing that you do kind of habitually that you believe contributes the most to your success today?
I rely on really good people to support the ideas that I'm trying to forward without micromanaging them. And we, as a team, pivot in any direction we need to creatively whenever there's an obstacle. My partner and I have put together a team where anything comes up, it's just another day. It's just another conversation. There's never a block that can't be overcome. There isn't a solution that can't be commercial. And we strive to that without ever losing a night's sleep over it. I mean, it's just in this business to be successful, particularly in development where there's so many surprises and there's so many different ways people might be working against you. We have to remain creative and flexible, and we have to remain open to hearing people and use great empathy to understand where other people are coming from in order to produce a product that's buildable, right? Because at the end of the day, if we know the market economics are there, then we shouldn't have ego invested in what gets built. It should just be commercial and responsible. And therefore, we have the flexibility to do that. And so from my perspective, that's one of the best assets that my partner and I have built into our company and our team in order to make us successful.
I love it. So team building and flexibility have really kind of got you to where you are today. So if you could go back to yourself, that version of Sean who had just picked up his shovel, his dad told him to go out into the project and start digging a hole. If you can go back to that version of you and give that person one piece of advice going forward, what would it be?
That's a tough one. I would say stick to the journey, believe in the journey, because that's really what it's about, and that's what brings you to where you are today. I mean, I wouldn't be doing what I'm doing now, which I think has put me in a position to really help change things in this country, if I hadn't gone through those things along the journey, and had the shovel at 12. And, you know, instead of interning on Wall Street during college, I'm you know, cleaning out live sewers. You know, like, you know, but you know, all of these things led to this point, and you know, have you know, I actually rejoice in that, right, and stick to it.
I like it. Stick to the journey. Have faith that, you know, you're going in the right direction. All right, Sean, we are at the end of the episode. So, you know, there's a lot of people that will be watching this and listening to this. If they wanted to get in contact with you, for one, what is it that you like to be reached out for? And for two, what's the best way to get in contact with you?
My email address, which is smclean@mpactcollective.com. You could reach us at the you know, through the website MPact Collective. That's MPACT Collective. And I will generally talk to anybody for any reason who's interested in something new, in changing something, and doing something difficult. I love academic exercises. I love hearing from people who think they're pushing the world forward. So I'm generally open. If I can make time, I will. I don't always have time, but I appreciate you asking me on. Good luck with this venture. It's great. And, you know, I look forward to seeing other people's episodes.
Perfect. All right. Well, yeah, Sean, I'm sure I can speak for everybody listening and watching. We really appreciate the wisdom that you shared with us today. For everybody watching and listening, Sean just shared his email. If you want to get in contact with him, reach out on email. I will also put his LinkedIn URL in the show notes, so check it out there. Otherwise, I hope to see you guys on the next episode. Thank you for joining us on the Real Estate Investing Club. If you've watched this far, I'm sure you've gotten a little bit of value out of this. So we would appreciate it if you hit that thumbs up, share it with your friends or family, whatever it may be. And if you'd like to share or partner with us on a deal, we absolutely love partnering on deals and are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode.